Hi, welcome on the channel. Today we will talk about Bitcoin. Bitcoin and crypto as alternatives. It's possible that the longer the war endures in Ukraine, the more people will be forced to use Bitcoin and other crypto assets. This has been reflected in the fact that Ukraine's President Volodymyr Zelensky recently signed off on a new law that grants legitimacy to crypto assets, allowing exchanges to operate legally and recognizing the right of citizens to hold their wealth in the form of crypto. I think the narrative of Bitcoin is as an open, permissionless payment network has certainly been strengthened for the good and bad, said Simon Peters. Good in the sense that with traditional financial systems becoming less effective or being frozen out of them completely, crypto provides a way to be able to still move capital and transact, and also potentially a medium to protect wealth where the domestic currency is significantly becoming devalued. However, with fears that Russia and its oligarchs may attempt to evade sanctions via crypto, Peter also admits that this narrative is bad, in the sense that an open permissionless payments network could theoretically make economic punishment less effective. That said, he affirms that Bitcoin is fundamentally neutral, while it's also worth pointing out that its blockchain is completely public and transparent. For Mike McGlone, the continuum of the war could serve as a catalyst for what they expect will be Bitcoin transition from a risk-on to a risk-off assets. He cites its relatively outperformance in 2022 against the Nasdaq 100 stocks index as an indication of this, noting that it's down about 19% versus closest to 15% for Bitcoin to March 14, despite the crypto trading with about 3x the volatility of the Nasdaq. Divergent strength is a takeaway for Bitcoin. Once the dust settles on the overdue mean reversion process in the stock market, I think war and Federal Reserve restraint Bitcoin should come out ahead, he said. Of course, war, much like the crypto market, isn't amenable to exact prediction. So who knows how long this war in Europe will last and how badly it will impact to crypto. That said, the market's total capitalization is actually higher now than it was when Russia forced invaded Ukraine on February 24. But while analysts also expect the war to weigh down on stocks for as long it lasts, some say that it could have more positive effect on Bitcoin. What's important in all of this is the political instability will once again highlight Bitcoin's main goal of being a transparent, open source peer-to-peer network not controlled by a single administrator or central bank. This means that even if banks are closed and local currencies fall in values during times of instability, citizens will still have access to capital through crypto, said Simon Peters. This analysis is supported by reports of a surge in cryptocurrency transactions in Ukraine and Russia, driven by a restriction on withdrawals in Ukraine and also inflation in Russia. If the war depends, some analysts suspect a recession could follow, which may in fact end up playing into Bitcoin's favor. The war is likely to tilt the world into recession, and I expect normal reversion of crude oil prices toward $50 a barrel, along with the collapse of the Russia economy and related deflationary forces, which should enhance the value of Bitcoin. The firstborn crypto is well on its way to becoming the global digital collateral benchmark in a world going digital, said Mike McGlone. Okay, this is more or less the consensus views among analysts, with Bloomberg Intelligence Mike McGlory also suggesting that the crypto market needs some time to cool down after ballooning in the midst of a global speculative and inflation frenzy last year. Declining cryptos are part of the ebbing tide, and the US stock market is a primary extended asset at risk of normal reversion, notably as the market faces central banks focused on reducing inflation. Assets that have related to much are at greater risk of reversion, he told Crypto News, before suggesting that altcoins are the greater risk than Bitcoin. Again, most analysts point to the fact that Bitcoin and other crypto assets seem to be correlated with stock markets at the moment, meaning that they go down for the same reason that stocks go down. Banks and other financial institutions treat Bitcoin and crypto as a risk-on asset, which means that tend to sell when they are nervous about the economy. The war conflict has been weighing heavily on stock market for several weeks, and the crypto markets have gone down with them, said analyst Glenn Goodman, author of The Crypto Trader. What if war continues for months? With the war lasting almost a month, the question arises as to how it could undermine a global markets, including crypto, because with the conflict sending oil and gas prices to new highs, this inevitably has a knock-on effect on inflation and asset prices. The Ukraine conflict will normally be classed as a small war, but the impact of sanctions on Russia could have a more severe impact on the global economy. As crypto is tracking stocks and closely it feels the impact of their recessionary pressure, said Glenn Goodman. Divergent strength is the takeaway for Bitcoin. Once the dust settles on the overdue mean reversion process in the stock market, facing war and Federal Reserve restraints, Bitcoin should come out ahead, he said. Of course, war, much like the crypto market, isn't amenable to exact predictions, so who knows how long this war in Europe will last and how badly it will impact the crypto. That said, the market's total capitalization is actually higher now than it was when Russia forced invaded Ukraine on February 24. But once again, the human cost of the war is something that can never be repaired. Okay guys, thank you for watching, please subscribe on the channel, bye.